between 2 o'clock and 3 o'clock. The same thing you would expect to happen in 10 o'clock to 11 o'clock a.m. session, silver bullet. Well, look what we have here. Another 60-minute time window. We have to look for stops or inefficiency. Where's the market going? Where's it reaching for? You know, you had that old high that you were aiming for all morning. It didn't get there. We have relative equal highs now across the afternoon. What's it going to reach for? The weekly and daily objective hasn't been met above the marketplace yet. So we're still bullish. Wait for a short-term shift in market structure, 1 minute and 5 minute. Wait for a fair value gap to form between 2 o'clock and 3 o'clock. And then when it drops down into it, when you're bullish, buy it and aim for that intraday high. If it can give you 5 handles, take it there. Leave a runner on and see if you can get to that higher time frame, weekly or daily chart. That's how you trade your afternoon silver bullet. Simple. Real simple. There's a whole lot more things you can add to it to supercharge it, though. But that's the easiest, simplest little approach to that model being there every single day. Even in choppy days, it's there. Oh, it's there. Every day. Then you have the last hour trading. 3 o'clock to 4 o'clock. I've taught you several macros that exist in that hour. And now we're talking about the extreme of the daily range for indices. Where's the 15-minute stop? Where's the stops? Who's made money? Where are they leaving their stop? Because it's resting right in the marketplace, and the algorithm will gladly go down to it or go up to it, and there it is. There's a setup there. Then we get that last hour. That's making the high or low of the day for index futures. Not all the time, most of the time. Unless it reaches the daily or weekly objective intraday, and that will be the high or low of the day. If it has done that, then the afternoon last hour trading has to be traded from a scalper's mindset, looking for a 15-minute high or 15-minute low or 15-minute inefficiency above or below the marketplace. And that's your target, and be content with it. Does it offer you 5 handles? If it does, get it and be done. So I've walked you through a daily range, mentioned the characteristics. They're very generic. Do you think about price like that? If you haven't been thinking about price like that, now you should. Because in my mind, the inner musings of the ICT, when I'm watching the daily range form, I have all these thought processes in my mind, and I'm anticipating certain things based on the logic I've showed you and talked about here. I am not surprised. I am not taken back in a gasp when the market does something at any one of these times of the day. I'm expecting all this stuff. But anticipating it and entering the trade is 2 different things. In the beginning, you need to just sit still and watch. And you desensitize yourself. You remove all the doubt, all the fear, all the trepidation about you being able to do this. Oh, it's rigged, it's fixed, it's fake. He only shows you the winning trades. He this and that and that thing. You have all these excuses that you have to sort out. All that's put to bed when you start seeing it happen over and over and over again. When you start seeing it live, pan out to script. Whose script? Mine. Not Elliott's, not Sam Siden's, not Wyckoff. Mine. This market is absolutely predictable. But there's times when the market's going to be a little fickle. This is simply going to give you the setups that you like to see. New York session, optimal trade entries. London session, turtle soups that shift into 2022 model or optimal trade entry. Breakers really do well in London. Reversal market profiles in New York session. Once the targets on the weekly and or daily chart is met and reached, chances are we have an intermediate term high or low, and then a breaker can be forming there as well. You see how you can anticipate all this stuff? But you have to see these things. All of these individual times of the day, the silver bullets are always continuation. They're continuations of whatever is in motion at the time. If you can't determine what is in motion, don't take the silver bullet. How about that? How's the logic for that? It's simple, isn't it? When in doubt, stay out. So we walked through how to go into the time of day. What time frame of the day, of all these different sessions, when are you going to set up shop? What's it going to be for you? Are you going to be a London boy? Are you going to be a New York shirt that trades? Are you going to be a lunch hour hero? Or are you going to be a silver bullet shooter, a gunslinger in the morning, or a gunslinger in the afternoon? Or are you going to be a Johnny come lately and trade the last hour trading? There is no advantage over any of them. They're all equally potentially profitable, and they all have their advantages within and of themselves because they're time-based and specific in character. Each one has their own individual character. So you have to trust that this is enough. If you just do one of these sessions and make it your model, you will control fear of missing out. You won't have it because you're limiting your attention, your focus to one specific time of the day, and it meets and allows you to work within your life. See, you're trying to probably do something that your business, that your school schedule, or your family, your spouse, your children, something's preventing you to be in the New York session. You want to do what I'm doing. You want to be able to do what the community's doing, but you can't do it. And you're frustrated. Like, man, what the hell? Wish this guy would talk about something else besides this time of day. I just did today. Where are you in that? Because it checks somebody's box off everywhere. Every one of these time periods can be traded. I don't care where you live. I don't care where you live, what you're doing. You're going to have to make a sacrifice. You're going to have to, folks. If you want this bad enough, you're going to sacrifice. And here's the thing. If you don't back test it and see that there is absolute validity to what I'm teaching and showing you, forget the people that are making money with it. Forget all that, okay? These companies could be fake. They could be paying them. They could probably paid actors by ICT. They're probably talking about money that doesn't even exist. This is make that argument. It's not true, but let's just say that for instance, okay? You looking at the old data, back testing and seeing it, and then thinking, okay, I understand the concept, and I'm going to go forward and now watch it going forward within one of these time windows of the day. Is it a lot of time that you're investing for that particular trading day? No, it's not. That's an advantage. You're not sitting there like a zombie staring into the abyss of these candlesticks and just not knowing anything, which is very frustrating and it's draining. These markets are vampires. If you hook up an IV tube to you and let it take all your blood, it will suck you dry all the way to the marrow. So limit the exposure to it. If you can't find your setup in these times of the day, or if you lose, stop. You know what's never going to happen? You're never going to blow your account. You're never going to have major drawdown if you control your risk and keep it realistic and use real stops. You won't be fear of missing anything. You'll have a complete business model. And you won't have to work a part-time job schedule with it. It's very small in terms of your time and attention is required. But you have to put a lot of time in the beginning when you're back testing and looking at old moves, studying it. Do these things exist? Or is he talking out his ass again? I'm telling you, go back and look at the charts. You're going to see it. And it repeats all the time. But see, what happens is you get caught up in all the new things I'm teaching, all the new content, all the new concepts. Give me a new trick, ICT. Teach me another magic trick. How about just using what I already taught right now? I've made it very simple. I talked about very specific times of the day. That is rule-based because the algorithm is going to operate in these hours a very specific manner. And it's going to deliver a price. Buying and selling pressure is not going to be a factor. The algorithm will price in all of these setups. That's why it sounds like arrogance. That's why people say, I don't like his attitude. He's too arrogant, he's too cocky. That's because I know my shit. I know the market. Like the back of my hand, I know it. I know I'm not going to be surprised Monday. I'm not going to be surprised on Tuesday, Wednesday, Thursday, Friday. It doesn't mean I'm taking a trade. It just means I know what I'm looking for. And if it meets what I'm expecting, and it all lines up and I feel like it's something I want to do, done. You'll hear about it. And I'll ask you, do you want to see a dose? And you'll watch me go in there Like I've already seen it before. I have, but nonetheless, you'll get that same skill set, but you're pushing it further in the future by trying to always change, always transition into something else. That 2022 model that I gave on YouTube last year, man, that thing is a strong model. And for the folks that say, can you just get off these 1 minute charts, ICT? Get off these intraday charts. I need something on a higher time frame. I want to be able to swing trade. Okay, go to a 4 hour chart. The same thing that you use, or I've been using on a 1 to 5 minute chart with that 2022 model, if you put it on a 4 hour chart, that will allow you to swing trade. You got to wait for it. It takes a long time. And it takes forever for the setups to pan out to your objectives. But guess what? Working class hero, that's your model. Did you have to change anything? Just the time frame. But all the logic is still there. You're not going to get a lot of trades. That's the sacrifice that you're going to have to make as a higher time frame swing trader. You're not getting a swing trade as many times as you can get a day trade or a scalp. I can find dozens of trades intraday. My students can find dozens of trades intraday. But we can't force dozens of swing trades. They don't form that frequent. It can't because the higher time frames are what they are. So if you like frequency and to be able to have velocity in your money, you short-term trade intraday. You have no overnight risk, no gap risk. What's gap risk? The difference between where we close at 5 p.m. and where we open at 6 p.m. Where we close on Friday and where we open on Sunday. That's gap risk. In years before, I didn't mind holding over the weekend. I didn't mind holding overnight. I don't do that anymore. I will never do that in the future. I don't trust what can happen. They can do some crazy nonsensical thing and all kinds of manual intervention comes in because of something happening in the world where one country doesn't like what another country's doing. And an event that may or may not be foreseeable occurs and then you're wiped out. A black swan event that we're in those conditions still, and it's getting more and more likely. All these factors make trading much harder. And I know there's competitors out there that like to sell their crap and they like to use me as a sounding board to be able to say, okay, for the people that don't like ICT, come over to my house. I got this and I got that, and I can do this and I got cookies. Go over there. I'm not saying don't do that. Go over there. Whoever's trying to get your attention, if you're not happy here, if you're not finding what it is you're looking for here, go do something else. Really do it. You might find something that works for you. I'm not opposed to that. I'm just saying my stuff is superior to everybody else's. This guy just outlined this many opportunities in a day. So why is he telling me only pick one of them when it would make more sense for me to be able to win here, because you're assuming as a new student that you're going to win all the time when you're not as a new student. You don't know yourself. You don't know the market well. And it's foolish for you to think that you're going to be successful that fast right out of the gate and be able to trade every session, every opportunity in a 24-hour window. You can't. So learn one of them. Pick one that fits easily inside your personal lifestyle right now. That way, when all these things, if they do start to get worse, then the stresses that come with it, they won't compound you into doing something outside of the model that you that has proven to you by then, hopefully, that the results that you're looking for can be obtained just in one of these sessions in the day. You only need one of them, just one. And if you get really good at one, then venture into another one in addition, and then slowly grow in that one. And over time, you may be able to do something in every one of them, but you can't do it in your first year. You can't do it in your first 2 years or 3 years. It's going to take you time to get real comfortable with working with a full daily range. And that shouldn't be a goal for everyone, but that's mastery. If you want to know what mastery is you can go in every single one of these time windows and find a setup and engage it and take it out. But unfortunately, young men are going to take that as a challenge and try to do that in their first 6 months or their first month or their first year, and it's going to hurt them. And that's why I'm telling you not to do that, because you can set yourself back in your progress and your development by doing something like that, because it'll build in all this scare, fear, anxiety, performance anxiety, basically, because you've done something more than is required. To make money, you have to do something that repeats, that you can control risk with. You can limit the amount of risk exposure you have to it, both in time in front of the charts and in the market, and with the assumed risk in each individual trade. So in the beginning, you want to limit that to a very small degree of exposure, not doing a lot of trades, because think about it, you're in the beginnings of that. So everything that's painful is going to be extremely exaggerated in your mind, that that loss was way worse than it really was. You know, if you're trading with a small account underfunded and you lose $200, that's like the end of the world. Like, man, I could have done something with that $200, blah, 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 versus losing $200 and knowing that you don't have to hurry up and run away and get into another trading setup that same day or that same session to get it back. Otherwise, you're viewing yourself as a failure or never going to be able to do this. It's a lot of growth that goes through the first stages of learning how to trade, and rushing into live money or a funded account that's passed, and you can get withdrawals and payouts from a funded account company and still not know how to trade. You can get lucky, get a payout, and still not know how to trade. So you don't want to discover that painfully. You want to know that you're absolutely bored with one of these times of the day. You know that, like the back of your hand, you know what you're looking for. You're not going to deviate from that. You're not in a rush. You're going to wait patiently for the setup to come to you because you're anticipating it. You're not waiting for the market to react to what price has shown you. You're not doing that. There is a difference, okay? There's a stark contrast between anticipating something and then reacting. Instead of worrying about what is the market showing me that it's still on the right side? Is order flow still confirming? If I'm bullish, is to do down close candles support price? If it goes into the down close candles, is it going past the 50% mean threshold? If it does and starts closing below that, they're warning signs. Doesn't mean completely bail on the trade. It just means, okay, what's the next two PD arrays below that? If I'm bullish and I'm long, is price not being supported by down close candles? If that happens to not be true, then and only then, you don't worry about it. You close the trade and you're happy with it. Be content with that. And you'll see many times that you did the right thing. But you can't appreciate what I just said until you go through back testing and then do tape reading and then do demo trading. And you've been there. You've seen it. You've experienced it. Now you understand it and see it before it happens. You anticipate it. But if you're trying to just jump over top of all that stuff and go into live fund trading or getting past with a funded account and trying to be able to trade a funded account and get withdrawals and payouts by these companies and not know what you're doing, you're going to fail. And you won't understand why you're failing, which will also be a great deal of negative impact in how you think about trading, how you think about yourself as a trader. All those things are going to be paramount to what you do in the next set of trades. And it's going to create nervousness, anxiety, and you'll have fear of getting into a trade. It'll completely lock you down. And you may have just made money. But being in a trade that's making you money and not understanding what it's like to be in that position, it's a scary feeling. And the only reason why that occurs, and the answer to that solution being found in back testing, condition yourself seeing it, then tape reading, looking for it without pushing the button, getting bored with how many times you're able to see it, and then venturing in slowly with demo trading for months. And you absolutely cannot take yourself and I'm going to shortcut it and skip all that part. You can't do it. So hopefully I've given you a ability to focus in on specific times of the day time-based setups and models that you can employ and use these as a rule-based idea going into the 24-hour trading day, and find your unique model to start with in these specific times.